One key fact that a lot of these articles that I see on this vacancy rate, a lot of talk about this rate, leave out that this vacancy today's video, the Toronto vacancy rate at 6%, what does it mean and what can we learn from it? Let's get to it. Hello everyone, this is Sam from SaberiSixRealEstate and Remax Realtron Realty Inc. As always, you can find my contact information in the description box in terms of my Gmail, Instagram, and anything you need to get in touch with me with in terms of my office as well. Also, please feel free to like and subscribe. Your feedback and your support in terms of a like and a subscription means a lot. However, you don't have to if obviously you don't want to. You're not obliged. Only do so if you actually like my videos. Anyways, in today's video, I'm going to go through the vacancy rates as we know it now, which is around 5.7%, the lowest we've seen in 50 years. I'm going to first go through the numbers based on the latest Urbannation report. And then at the end, I'll give you my feedback and analysis and my professional opinion upon the numbers. Anyways, let's get to the numbers first. So first and foremost, as mentioned above, 5.7% vacancy rate, which is historic. Haven't seen it in 50 years. Previously, the highest was around 1.2, hovers around 1.1, 1.2, 1.3, definitely below 2%. So this increase to 5.7% is staggering. One key fact that a lot of these articles that I see on this vacancy rate, a lot of talk about this rate, leave out that this vacancy rate only has to do with purpose-built rental apartments. So this figure of 5.7% is only referring to vacancies in purpose-built rental apartments. What are those? Normal rental apartments, where the entire building is owned by a property management company. So it's not as if each unit is owned by different owner. Some units are occupied by end users, some units are occupied by tenants. No. Only rental apartments, not condominiums, not obviously freehold rentals. That is a separate part of the rental market. So this vacancy rate does not refer to condominium rentals. It does not refer to freehold rentals, obviously. It only refers to rental apartments. That's important to mention because a lot of these articles leave that fact out. But anyways, let's go through more numbers. So the average rent for these purpose-built rental apartments dropped about 10%, which in comparison to the rest of the rental market, especially in terms of condominium rentals, we saw a 15% drop in those. And those, condominium rentals are a bit more volatile in that sense because each unit is owned by a different individual. And also you do have the alternative of selling as well. But we'll get to that again later. So right now the average price stands for purpose-built rentals around $23.37, and that's in Toronto, right? So that's $23.37 in Toronto, which is a fall from $2,500. So once again, a fall of about $200 in average rent. In the 905 region, the GTA was far less pronounced. It's only a 2.2% drop in average prices. And furthermore, in terms of the vacancy rate in the 905 region, it stands about 2% as well. So this 5.7% vacancy rate is very much so specific to Toronto. Although yes, a 2% vacancy rate in the GTA is pretty poor. Once again, as I've said, it hovers around 1.2. Not trying to sugarcoat this whatsoever. However, the impact on the 905 has been far less drastic according to the numbers, and that's pretty common sense, both in this area and once again in condominium rentals as well. In terms of average rent prices, all the videos I've made, I've compared Toronto rents to GTA, to Richmond Hill, to Markham, to Mississauga, to Peel Region, Durham. I've made plenty of videos, and a common theme that I've been establishing here is that the rental market all over the area is down, so all over the GTA, but it's most pronounced in, downtown central Toronto in terms of both, once again, condominium rental prices and condominium prices for sale as well. So let me give you my feedback on what this exactly means here. A lot of people hold this erroneous notion that this vacancy rate says something drastic about the condominium market and the rental market as it refers to the, once again, condominium rentals and freehold rentals. That is a separate commodity in terms of the rental market. The rental market is divided between purpose-built rentals and freehold condominium rentals. Those are the two separate sides of the rental market. And this vacancy rate only says something about the vacancy rate. It refers to the purpose-built rentals. You cannot draw conclusions from a figure associated exclusively with one aspect of the market and apply that conclusion to another aspect of the market that has nothing to do with the initial metric whatsoever. Because vacancy is not a rampant issue whatsoever with condominium rentals. Let's take that as an example. I'm not saying that the condominium rental market is not in the dumps. I have been establishing that for a long time. But you could point towards so many other numbers and so many other metrics to make the argument that the rental market, as it refers to the condominiums, is doing poorly. Now let me address what I just said. Vacancy is not an issue with condominium rentals because owners always have two options: continue to rent or sell. That option does not exist on a unit by unit basis for purpose-built rentals. So one of the reasons we've actually seen the condominium market decline so rapidly is because a lot of landlords who could no longer reap the cash flow they wanted to reap at the rental rates they were charging in the past decided to list their property for sale and not deal with either a negative cash flow or vacancy. So the mere fact that we are seeing an influx of condominium listings on the market is proof of and in itself that landlords do not generally deal with vacancy. They may deal with vacancy 1 to 3 months, but a prudent landlord will either take a loss on the cash flow or take less of a profit on the cash flow when the rental market is down, or sell it. So you cannot derive conclusions from a vacancy rate and apply to the condominium market. The condominium market is poor for its own reasons. I'm not saying the condominium market is doing well, although it is heating up a tiny bit. But as I've established in the last 6 months of videos for my clients and my viewers, that the condominium market is doing poor for its own reasons. Has nothing to do with the vacancy rate. That's my breakdown. And if you have any further questions, feel free to get in touch with me. And yes, stay safe and thanks for watching.